But interest only, podcast, studio,
Yeah.
first and future finance, money.
Welcome back.
Welcome back. Yeah,
It's been a long week, Liam.
it has. I'm tired. It's only Thursday.
It's
Man.
since last Thursday, I've had a deal in CTC, cleared to close,
Okay.
taken out of cleared to close for final review. Borrower went approved ineligible, which means they were no longer qualified for the loan.
What caused that?
They spent some money that they shouldn't have spent.
They get a truck.
They did not buy a truck, but they did move some money out of the account that the lender looked at.
This is a purchase?
Yeah, this is a purchase.
Oh, okay.
Yeah. So they moved some money out of the account. So it made it look like they didn't have enough money to close. So lender, asked for an updated bank statement to, show proof of funds to close. They sent in their regular stuff. One PDF was attached to another, but it was two accounts.
So unprofessional.
It was actually an alarm reminding me
to do this.
But yeah, so they the lender puts it in as approved and eligible. So we're thinking we're getting cleared to close, and we're scheduling, and they're like, wait. Nobody's approved for this loan. They're not eligible to purchase. So we got that fixed. We lowered some fees, shuffled some things around, balanced with title, and we're gonna close.
Awesome.
We're gonna close.
But you got scared for a little bit there.
I was, because there's so much that could have happened that would have prevented this.
Yep.
If I was able to get them, some down payment assistance, or if there was only some type of fund that covered closing costs, if we could get our government to sign bills and push them through, what's so bad about that? What's so bad about helping everyday people?
Well, no, all my money needs to go to other countries. All of my tax dollars should not be going to the people in my country. Why would you think that?
Well,
it's an awful thought.
They got
also, boom, we got another camera angle now. We're official. Forgot to mention that.
So official.
Mm-hmm.
I don't know. Does it lose lore if you tell them that we're switching camera angles?
Maybe. But maybe, they'll see it,
Oh, it's going to be so good. It's going to be so good. We're coming up in the world.
We're
Episode 9, man. We're talking about, or at least I wanted to talk about this housing bill that Trump won't sign.
I didn't see a single thing about it, so I'm going to learn with the audience right now and ask the questions.
Oh,
Hopefully people want to know, because I don't know anything about this.
Yeah, so the Road to Housing Act is something that was presented to Congress. Going to help everyday Americans, grants for homeowners that are already in their houses, or fixing up the houses, getting things up to code. It's going to help a lot of people who are in, fixed income situations, put a new roof on.
Okay. I hate to think like this. But this is just how it is in a lot of, I don't even want to say capitalist societies, because what we have is fake capitalism. But where is the profit incentive to do that for the people giving that money? Because there's got to be a justification. There's got to be a reason. They got to get something out of it. That seems too good to be true. You know what I mean?
Yeah. So the profit justification, in my mind, would come from, we have something called FHFA.
Okay.
Right?
Yeah.
That funds all these mortgage-backed securities.
Yes.
Right?
Yep.
So if I have a better house, if I want to borrow against that house, wouldn't it help me if I had a house that was actually qualified for the funding?
Okay, so I don't want to think this negatively. Is that not just pumping more money in to inflate the housing market, to inflate the prices of those houses so there's more value in them? But how does that help someone get in? Well, actually, if you're also giving grants to people to get them into houses, is this not just a nice way of saying inflation?
The wheels are turning.
That's where my brain goes immediately.
The wheels are turning. It always comes back to who's going to pay for it, right? But
that's why I own gold.
If
I protect myself from this exact situation hurting the dollar, because now this is more dollars being printed in circulation, given to people, which, yeah, it's real nice if you own a house. If you don't own a house, though, your dollar has lost so much value right there.
Well, that's the catch-22 of it, right? Mm-hmm. Yes, the house is going to cost more dollars, or I'm going to have to give more dollars to buy the house. Mm-hmm. But at the same time, why is this where the buck stops? Why is it that when we're talking about printing more money, when we're talking about, doing something that's going to help a homeowner that's in the house, trying to make it better for the next person or even better living standards for themselves, why is it who's going to pay for that, but not, hey, Iran, we think you're building nuclear weapons. We're gonna spend $300 billion over there. We're gonna print $300 billion for Iran.
Yeah.
To to do whatever, to not build those weapons when we could be using $300 billion to build our infrastructure at home.
I mean, don't get me wrong. I think that I'd rather, if I had to pick between the two, I'd much rather have the money go to the Americans and the housing and grants for people, for sure. But also, the other end of that to me is that is money that's just being parked somewhere. That only hurts people who don't own houses and aren't in houses. And if they don't qualify for that grant, that only hurts people with dollars. Mm-hmm. It's great for people with the houses, with the infrastructure. That's amazing for sure. But the inflationary reaction to that isn't going to go well. And then rates are going to need to rise, which means it's going to be more expensive to own those houses because the rates will need to rise with the inflation for that money to be still easily borrowable, but not too easy where inflation gets high. But I guess the reason my brain goes there is I've just started reading The Wealth of Nations because I've been want to read that for a while. And one of the main things that's talked about, or where I'm at right now at least, is that an economy is not held up by the standard of how much gold an empire has. And this is from 1776, I think the book was written.
Would they write it in fucking one of those feather pens?
I'd probably. In 1776, I mean, that's the Declaration of Independence time, Constitution, that's same shit. But empire's wealth is not held by their gold is the whole theory. It's held by the money that's flowing in through their goods and services. Yeah. So if we're printing all that money, because that is what we're doing, we're printing money, and we're giving it as grants to American homeowners and inflating the housing economy while hurting the dollar, wouldn't it be even better to put that money into infrastructure? Because we gave all of our infrastructure manufacturing to China back with Clinton and Reagan, more Clinton. So wouldn't it be better to build more manufacturing, to build more jobs, to create more goods and services, to then make more money that way and export more?
That would be
logically
a phenomenal rebuttal if we weren't already spending more money than we're bringing in.
Also true. Yes.
The GDP wasn't higher than what, or I'm sorry, if the GDP wasn't lower than the dollars that we're printing, that would make perfect sense. But I would argue, if I'm happy at home, if my roof's not leaking because the government gave me some money instead of spending it overseas or on a new road, then I'm going to be a better worker. I'm going to produce more for the wages that I earn.
That's true, but also I feel like we're just kicking the can down the road because
Kick that shit.
But that's what we always do. It's going to crash one day.
So that's what I'm saying. Going. Why are we stopping here? Why is this the bill that's not getting signed? If we kick everything else down the road,
why not the one that's helping American people?
Exactly.
Okay,
that's my point.
That's a fair point. That's a very fair point.
Man, some good news though.
Yeah.
Rates are, we're still at odds with Iran. Rates are back up to I think 6.5.
I think so. I haven't really looked recently. I've just I've been doing a lot of cash out business and HEIs, and HEIs, the rate doesn't matter because there isn't one. They're not even going off the 10-year. They're basing it off the property, which I want to go more into HEIs in a second.
Those are a cheat code.
They're insane.
Those are a cheat code.
We'll touch on them now. Honestly, we'll touch on them now.
We don't even have to talk about the rates. Everybody hates rates.
Everyone
we
hates
all
rates.
agree.
Rates don't matter.
Rates are bad.
Rates don't matter. I'm sorry. If you think the rate matters, no. Yeah. What matters is your situation. Going back to that, kicking the can down the road. Just
kicking the can down the road.
Keep kicking
man.
it.
Yeah, but like interest, let's just explain the boogeyman right now. So interest rates are just the cost you guys pay to borrow money, right? That's the price.
And the 10 years, the price that the banks are borrowing the money at, give or take.
There you go. So obviously there has to be some margin there. The banks have to make money. They're getting money printed and the Fed says, hey, we're going to charge you this much for this money. The banks are wholesaling that money that they took back to you. You put money in the bank. They're giving you 0.01% or 4% APR.
Something bad.
While they're lending it out to other people at 5, 6, 7, 8, 9% interest.
Yep. Depending on how good or bad of a borrower you are, how specific your needs are.
There you go. So the cheat code, Liam, is a new product that's come along.
HEIs. How new are they? Because you've been in this industry a lot longer than me. I just heard about them about a month ago, 2 months ago.
So HEIs have come up as and this happens every couple years in real estate and in the industry when things are down. There are some big wigs that are like, hey, we need something new. We need something to get the dollars moving again, get people borrowing money so that we can stimulate the economy.
And the economy is slow right now because I want to say a quarter of Americans have less than a 660 score or 660 or less. So less people are qualifying for traditional mortgages at reasonable rates. But the 10-year can't come down because, again, we're missing unemployment numbers and inflation's high. So it can't happen. And then people just aren't qualifying. Like that's really just the bottom line is people aren't qualifying. So now the HEIs, what I think is really nice is the credit score minimum is like 500, which is crazy.
What before you get into that, just like some history on.
Oh yeah.
On
I'm getting ahead of myself.
Yeah,
I'm excited.
So like the last innovation we have was what you were just talking about, the 30-year mortgage.
Yeah. So which is I didn't know that's rare. Like we're the only ones that do that. I think we talked about that before.
That's an American thing.
It's crazy.
That's in America. Everybody else, every 5 years they got to refinance their house.
Yep, and they're all adjustable rates too.
Yeah, so that's the thing. Your interest rate is based on how well your country is doing everywhere but here in the United States
relative to the dollar.
So this concept of a 30-year mortgage before like the 1950s, people had to put 50% down on their house.
Yeah, we did talk about that. Yeah, that's
so you're
terrible.
talking about. Hey, I'm a millennial. You Gen Z, like. We feel the struggle.
We don't have 50% to put down.
But exactly. We have to understand that our grandparents bought those homes. It wasn't for a nickel and 2 dill pickles. All right?
No.
They put half the money down and then the rest was a down payment or a mortgage that they got for 15 years.
Yep.
They had to pay that house off. This new innovation came up. Roosevelt.
Okay.
After the Great Depression, he's like, hey, people can't afford houses. We're going to extend that term out to 30 years.
Yeah.
20% down, 30 years.
30
That was unheard of. Most recently,
that's insane.
Your president said, we thinking about doing a 50-year mortgage.
That's insane. That's insane.
That's okay.
I'll buy a house at 10.
So here you go. So this is 3 years in the maker, and we're hearing murmurs, and people are getting creative. The birth of the home equity investment. Okay. So we have a hybrid program. We have everybody's heard of equity lines of credit, HELOCs.
Yep.
Right.
HELOANs.
That's an adjustable rate that you borrow against the equity in your house. Then you got the HELOANs, which is the fixed rate that you borrow against the equity in the house. Some genius said, hey, what if we just gave people lump sums of money and didn't make them pay us back until the house gained value or they sold it?
That was where I was getting ahead of myself is what I love about it. And the way I explain it to clients is like, you are getting qualified as a borrower for sure, but you're secondary to the property. They're qualifying the property to make sure they want to invest in the home's equity.
Yes.
And then they're making sure you are a good enough borrower to where the house will sell or you will cash out refi. You have a plan of some kind. I've done 2 HEIs this week, not to cut you off.
Go ahead.
One of them, this woman had cancer. So she missed a lot of payments on her mortgage. She's in forbearance right now. She's going in foreclosure next month if we can't close a loan in time to get her the money she needs to pay them back.
Damn.
We're doing an HEI. She's got like a 550 score, getting $67,000 in her pocket. She only needs 20 to pay back the house to be out of foreclosure.
Yeah.
And she's about to be able to keep her house because of this HEI, where any other loan that you're going to get right now because of loan modifications or lates you have on mortgages, you won't qualify for a traditional loan. This is the only way that she's going to be able to keep her house.
Why wouldn't you qualify for a traditional loan?
Well, if you have lates, what lender is going to want to lend to you where you themselves, you are the borrower, are the primary thing they're qualifying rather than the property. So
you're talking about the bank overrides.
Yep.
The overlays.
Exactly.
So
because the bank's not going to lend to you if you have late payments. They're going to be like, you're not a good borrower. But the HEI companies don't care as long as the house is good. And as long as you have a 500 credit score.
Oh, you know what? Yeah. You're right. Because I tried to take somebody there that was under a 500.
Yep, 500 minimum.
But I mean, 500 in the lending space is like bottom of the barrel. Like there are a lot of banks that will kick you out. Like they'll leave you in the lobby if you have if they find out you have a 500 credit score before you talk to them.
Or they'll give you a 25% loan minimum, like per personal loan, something. They're gonna hoe you
just under usury.
Mm-hmm.
So it's like, if I have a home and I've been in that house for 5 years.
Yep.
I bought in 2021?
Yep.
2021-ish?
It's 5 years.
Let's say I tried to refinance my house, right? I want some equity out of the house.
Yes.
I wanna buy a boat.
All right, yeah. Take money out, buy a boat. I'm not responsible.
You know what I'm saying? I want to buy a boat. I've been in this house 5 years. I bought it for $176. Mm-hmm. Now it's worth $300,000.
Okay.
I've got a 540 credit score because I don't believe I've cashed out on everything except for my house.
Yeah.
So I don't have any credit history.
Nothing.
This HEI, this will help me.
Yep, exactly. Only stipulation, 75% loan to value, unless they are going to be a third lien because you already have a second lien because you're irresponsible. So then it's capped at 55. So then you better been in that house for a while or put some money into the house.
Okay.
For sure.
Check this out, Liam. I got my $300,000 house, right?
All right.
You gonna do this math for me?
I'll try.
Okay. So I got my $300,000 house.
Let me get a calculator up. I got one somewhere.
I owe $175. I took out a HELOAN, a home equity loan, for $25,000.
Okay. It's $200.
How much money can I get from the home equity investment?
So, if we can pay off the HELOAN, first we have $100,000 of equity. First off, total.
That sounds pretty good. Give it to me.
So, well, hold on. So we're gonna take that 100,000. I'm gonna look at that compared to the 300,000.
Yeah,
you're at 66% loan to value at 200,000. Okay. So if you don't pay off the second mortgage, if you refuse for some reason, nothing. Can't get anything.
No money at all.
Nothing.
So I got $100,000. My house is worth $300,000.
You can't get a single dollar if you refuse to pay off that second mortgage.
Hey man, this is sounding like a bad deal. What's my other option?
So $300,000, and then let's say we do pay that off. That's a $200,000 loan. So first, that's $25K you're going to be getting now right there.
Yeah.
And then we're going to take that $300,000, 75% of that. I forgot the percentage. 300,000.
Yeah, it's not $2 million
times. No, it's not.
That's what I saw pop up on the screen over there. $2 million.
225 is the highest loan amount you can go to.
Okay.
So you can get that $25K to pay off that second mortgage, and you can get another $25K straight in your pocket at that point.
In my pocket.
Assuming you have good credit. It might be from what I've seen.
What's good credit for the equity investment?
500 is the minimum. I would say if you're anywhere 600 or above, you're going to get that max amount offered. If you're at 500, you might get more like 22. They don't really take too much off, but they aren't going to give you the full amount.
But you're talking about $25,000 in my pocket with no payment.
No monthly payment, no interest rate, and you only have to pay it back when a financial transaction happens on the home, whether that be you selling the home, whether that be you getting a cash out refi. Like I have another client right now, just signed him yesterday. He's FHA. He has 4 lates in the past couple months, past year, let's say. In FHA loans, if you want to take cash out, if you have 1 late, you're done. Not going to happen in 12 months, which is becoming a lot more common. So for an HEI, we're giving him about $57,000, if I remember right. No monthly payments. He's paying off all of his debt because he has about $30K in other debt. He's getting caught up on his mortgage and paying a little bit extra just to be like, hey, my fault. Yeah. And then he's got a little bit extra in his pocket. And then in 6 months from now, or it's going to be more like 8 months because his last late, I think, was April. So, yeah, we're almost a year away from being able to help him. Okay. We're going to be able to do a full cash out refinance, pay off this HEI, which he's barely going to have to actually owe them on, because the longer that you hold an HEI, the more money you owe them, essentially. So if he's paying it off, there is, absolutely. But if I give you $1,000 and I say pay me back in a week, I'm only gonna ask for like maybe $10 on top. If you don't give it to me for 30 years, hey, I need something.
You got over.
Exactly.
Got over. If I owe you $1,000 for 30 years, how much would you charge me, Liam?
After the first year, you're getting like 100% a year at that point. $1,000, that's a payday loan.
No, but I think the good part about the HEI is it's capped. So if it does take me 30 years to pay it back, I still only owe, I think it's like 20% of it. So if I borrow $1,000, I got to pay you back $1,200.
Exactly. So they can't take more than a certain percentage of what they buy into the house, which I think is really nice. And it only matters if your home appreciates. If your home depreciates, if you buy in a bad area or something happens in your area, they can also lose money on the property. They're not just going to take more from you. They are going to take what you owe them.
So it's a true equity split. They're investing in your neighborhood going up in value, which in the history of housing, I don't think it's ever happened.
No, and especially if if this bill passes and we pump money into these houses, they're only going to make more money.
So this is a good investment. Like I said, so in the history of housing, you can Google this, you can look it up, you can fact check me. Home prices have only gone up since we started building them.
Yep. Forever.
That's it.
And they will continue because, like we always talk about, all stocks, all investments, everything always goes up. Everything all the time goes up.
Yeah, but so this is another
when
thing.
It doesn't.
Hard value. It just takes more dollars to buy them. It's still a house.
Yeah.
It's still a house. Speaking of houses, people are buying them again.
Are they?
Yeah.
Are you sure?
Realtor.com just updated.
Really?
The mid-year update says the price growth is slowing. So things are evening out. People are buying houses, but the amount of dollars it takes to buy them is only growing at a pace of 1%.
I hate the consumer, bro. I hate the consumer. We're in arguably one of the worst economies we've had dollar-wise in my lifetime, for sure. Like second only. Actually, if you read a lot of statistics now, I don't have any off the top of my head, but a lot of financial statistics now are worst whatever since 2008. And we all know what happened in 2008. So we're in objectively a worse economy than we were since the worst economy in the U.S., since the last worst economy in the U.S. And we're selling houses. People are taking loans. The economy, in terms of people spending money, has not slowed down. We can only blame the consumer. Like, yeah, the government fucking us up. Yeah, there's a lot of things that are going against us. If the consumer doesn't stop, they're going to keep going. You know?
So there's another side to this. You're not just irresponsible for buying things, right?
No.
Like, people have to live. The more we've said this time and time again. Every episode, I think. Every episode we say it costs more dollars to buy the thing than it did yesterday.
Literally yesterday.
So you can't blame people for spending the money that they have when the wage growth hasn't caught up
It's
to
something
the rate
bad.
of inflation.
It's something bad too. It's like 40% or something like that over the since like the 80s.
No, I think it's like a 75% growth. Like wage growth has gone up like a quarter on the dollar.
Mm-hmm.
Like, so for every dollar something goes up, you might get a 25-cent raise.
Yeah.
So if I'm losing if I'm losing 75% of my money every year, just, or a quarter of my buying power every year, that's not gonna, that's not gonna have me jumping for joy to make investments. Right? I'm trying to eat.
Yep. I want to eat.
I want to eat food, but McDonald's costs the same as a steak. You get what I'm saying?
Ridiculous.
Like Outback and McDonald's shouldn't be the same price.
No.
That's not equal to me.
Not at all.
So, but when we're talking about the housing market, in that aspect, people are always going to need a place to live.
Yep.
You have to have shelter, whether you're renting it or you're buying it. You will always have a place that you're going to call home.
Always.
So, when you got to move, you got to move.
So, since 1985, the median U.S. household income has grown about roughly 252%. Mm-hmm. Median home prices have gone up about 400%. So there's a 150% disparity. Yeah. More money is going into houses, and that's only gonna be exacerbated by this bill. I'm still gonna complain. It's good for the Americans, but also I'm still gonna complain because we shouldn't even be in this position in the fucking first place.
Because we're well past that point.
We are.
I was you when Bernie Sanders was running, and he told us, "Hey, we're gonna have education for Americans. We're going to have healthcare for Americans, healthcare for all. We're going to have jobs created by the government."
Yeah.
He never said free.
No.
Never once. He never said free. He said we're going to have all this stuff, and you're going to be charged a little bit more in taxes. That was...
A little bit. Only a little bit.
He would do this. He would say, you're going to be charged a little bit more in taxes.
That's also a slippery slope, though, because... we said the income tax was only going to happen because we were at war. We were at World War I, I think it was. It wasn't. It was two.
And it became. They like, hey,
we still have it. We still have it.
They said, hey, you know what? This is a pretty good thing.
I like this.
Have you heard the story? And that's I'm gonna come back to this, but the income tax thing reminds me of a story about the chimps in the what is it, like a chimpinarium? What is that?
I don't know the term.
Okay, so
zoo.
So it's not. It wasn't a zoo. It was like a social experiment. So there's these chimps, and they're in this. It's basically a cage.
Okay.
There's one tree in the cage. There's some bananas at the top of the tree. Right. So for the first month they're in there, they let the chimps eat the bananas as often as they want to. Right.
Okay.
So one day these scientists, these cruel, sadistic motherfuckers, start dumping water on the chimps as they grab for bananas, and they hate water. Okay. Right? So every time they reach for a banana at the top of the tree, they dump water until eventually none of the chimps want the bananas anymore. They're like, fuck those bananas. We're not going to get them.
Okay.
They bring a new chimp in.
Yeah.
Right?
And he doesn't know about this.
He doesn't know about the water.
Yeah.
So the new chimp climbs to the top of the tree to get the banana. They don't dump water on him. The other chimps are like pulling him down.
Okay. Yeah.
And then eventually that just becomes the norm.
I see where you're going with this.
So they introduce so slowly they start taking the chimps that knew about the water out of the chimpinarium.
Yeah.
Right? Until no chimps remain that knew about the water. Okay. But every week they're bringing a new chimp in, and every time that he goes to climb the tree to get the banana, the chimps are pulling him down.
Right.
So now there are no original chimps.
Okay.
None of these chimps in the chimpinarium have ever had water dumped on them, but none of them go get the banana.
That's crazy.
Those bananas are taxes.
Okay.
So when you have a belief system in a country, you have to replace it with something.
Yeah.
right? You can't just snatch the idea down. So when taxes became the norm for the American government to function,
yeah,
they're like, oh no, this isn't going away. These are our bananas.
Yeah, we can't survive without these.
We need our bananas.
Yes. Okay. Yeah.
So that's my little spiel on like, you know, taxes. But yes, unnecessary. We actually fought a war when we.
And that was over like 2% tax. I know where you're getting at.
When
we
started
2%.
the country, that it was about paying taxes.
We threw tea in the Boston Harbor over 2% taxes, and we're getting taxed at like 30% now and just accepting it.
Oh my goodness.
Men used to go to war. I'm not going, but you know.
I almost went to war.
What haven't you done, bro?
I bounce around a lot. It could be my ADHD, but
that's fair. I get that for sure.
I have a lot of different interests. But yeah, like coming back to the housing market again, man. Like it's fun. It's a funny thing because people are buying houses, but you would not believe the deals that people are getting on these houses.
That is true. I've seen some crazy deals. I've wrote a couple. Honestly.
Bro, I put one in today. Ones. This lady's buying a $400,000 house and is getting $10,000 in closing costs covered by the seller.
Damn.
Like,
how much is the loan amount?
It's $400K.
That's nice.
$400K. So she's probably going to bring like 20 something to closing. I'm closing another one tomorrow, almost 600,000. They're only bringing 40 grand to closing.
You should put me as a TC on those.
It's like so it's like less than one. You're buying houses for less than 10%.
Yeah.
To control an asset that's going to be worth $1 million one day.
And you're not parking your money in it too much. And especially if bills like this pass and the economy keeps pumping stuff into houses, I mean, sky's the limit. So
that brought up an interesting thing in my mind, man. Like,
go for it.
What are we going to do? What is the next HEI? Like, what are we going to do when all the houses are $1 million? Because you're not going to be earning that.
I think, because I know we're heading this way, because we're doing so much of, like, so much change is happening in terms of, like, the qualifications on the properties now and the money going in the properties and also just the way the dollar's flowing. I think the next qualification change is going to go to the credit scoring systems. Ooh. That's my theory. I could be very wrong, but I think FICO and Vantage are such outdated scoring systems to where it's not going to be how are we qualifying borrowers based off of their income or the dollar amount. It's going to be like a number being like a score. Like if I have a 699 score or a 700 score, that should not dictate a quarter point difference of if I'm a good borrower or not.
No, keep talking. I like this.
So I don't know.
This road.
The credit score system has been outdated for a decade now. Now we have AI. Like also the weird stat, I'll have to find and put on the screen maybe, but one of the things I've seen before is, did you know the most likely to repay every payment on time on mortgages specifically is the 640 to 680 credit score grouping? They're the most likely to make their payments on time every month because they want to stay in that range. The people in the 800s get complacent, think, oh, I can miss a payment.
Yeah.
It's like when you get like an A on a class and you're like, I don't need to do the final, I'll still pass. That's the 800 scoring group. They think they get away with it. And then the 500s, they're there for a reason. If you have a 500 score, if it starts with a 5, there's lates. I know it for a fact.
Yeah.
So
you don't get that low without trying, right? That's
so if the 640 to 680 range is technically the best in terms of repayment, why are they not getting the best pricing? There's got to be some other qualification besides a number that can give them better pricing. So something's got to happen with the scoring system if our money system's changing.
I love that. We should start our own credit agency.
Can we do that? Are we allowed to? Is that kind of like a conflict of interest?
It's a free country. It's a free market, right?
True. Yeah.
We can start. So we got Equifax, TransUnion, Experian.
Yep. That's it.
Why can't we start Leonex?
Yeah.
You know what I mean?
It could happen.
Leonex Credit Agency.
TM. We're trademarking that right now.
Do you have money?
No.
900 score.
900.
The more money you got, the higher your score is.
True. The more liquid assets you have.
Yeah.
And that's a whole other rant. You know, on people won't know this probably. The assets that you report to a lender when you buy a property are only ones that you tell us about that we report for you. So they don't know you have assets. And like, it does help with your qualification, but for some reason it doesn't help with the rate you get. If I have $10 million in liquid assets, I should be able to get whatever rate I want on the market, regardless of my credit score, because I can pay off, I can buy the bank. So you're going to give me whatever rate I want, but that isn't how it works. So you're right.
Yeah, I love that idea. I didn't even think you had that in you. I'm actually shocked.
Yeah. Also, speaking of other things that I wanted to talk about, because I didn't really get into any of the thoughts I had today, the Japan 10-year Treasury.
Yeah.
Have you been watching it?
I heard about it. It's up, right?
It's up like crazy. It's up insane. So for those who don't know, because most people, because I'm a fucking nerd and I just like this stuff for some reason. Japan for like a decade had a 0% interest rate bill, I guess they passed. I don't know fully how the Japanese government works, but their interest rates at some point were so low where they were actually paying you to borrow money. So a big thing that happened was Western traders or just people in other currencies that were strong relative to the yen were borrowing money in Japanese yen, getting paid to borrow it or borrowing it at pretty much 0%, investing that money where they want to invest it in, whatever their niche was, real estate, stocks, whatever, and leveraging free money. Because like we're talking about the 10-year Treasury in the US, that's not free. That's at 6.5% right now if you're borrowing it. So people were taking this practically free Japanese money and spending it how they want to spend it. But that also makes the Japanese 10-year Treasury, as an investor who wants to buy into Japan, not good. Because why would you want to buy a 0% returning asset?
Return. So that means I give you $10, you give me $10 back if I ever cash it out.
Exactly.
Or my $10 might lose $10 if you go back into those negative numbers.
And we don't even talk about inflation as well. So like, let alone anything else that happens in the world. That's just it existing in a vacuum.
Yep.
So I don't know. I have a theory of a couple things that could happen here. One is because this is so much of more of it. One, with the combination of the lack of trust in the U.S. dollar and the lack of people wanting to be in dollars, because all other countries are moving away from the dollar. Here's another asset that is still in the Treasury bonds for people who want to stay in bonds that's becoming more attractive. So that means more dollars are going to leave the U.S. dollars, which if we know anything about bonds, they work inversely of stocks. So stocks have equity, the more money goes into them. And the stock price goes up, the more money is in that stock. Bonds work the opposite. The more money that gets put into the bond price goes down because there's less of a need to make it attractive. So with Japan having pretty much all-time high bond prices since the 90s, early 90s, late 80s, I think a lot more dollars are going to flow into the Japanese bond market from other countries who hold U.S. debt, who are looking for an excuse to get out of it and want to get out of it, which means higher interest rates.
Well, they could. I mean, it's going to be arbitrage, right? Because if I roll my 4 or 5% U.S. bond into, if I take the profits that I made on that in the last 2-3 years. And roll it into a Japanese 10-year Treasury with U.S. dollars. I'm starting over again. I'm starting. I could take almost all of it, with the hopes that it gets to 4 or 5%.
Yeah.
I don't think it's gonna get there. But
yeah,
it'd be like investing in U.S. bonds 5 years ago.
Yeah.
So I mean, that's an incredible opportunity, especially when it's coming up from what, 1? Zero. It's coming from zero, so it's tripled in value. Who's the one guy that's been investing free money, just holding it there in Japanese bonds, and then woke up to his account today like, holy shit?
Yep.
It's tripled in value.
Finally, just forgot about it like a Bitcoin wallet. They're like, oh shit. But
he woke up today with 280x return.
But that's the thing, though. As good as that is, just like we talked about with the bill that's being passed, as good as that is for the guy who's been holding Japanese yen for forever, no one buys treasury bonds. It's old people buying treasury bonds, giving them as gifts to their kids or whatever, just parking money, and psychopathic, sadistic traders who just want to see stock movement.
Why does somebody buy a treasury bond over Apple stock?
Perceived safety, I think, is the simple answer, because you think a country is more sovereign than Apple as a company. Japan is going to be around way after Apple, in theory. So it's a safer investment. It's not moving as much. I don't want to say there's no innovation, but when countries innovate, they innovate long span. When a company innovates, they innovate every year, because in business, I feel like you either die or you keep growing. There's no stagnation in business.
So
you're
a bond
slowly
is
dying or building.
you're betting on the sun coming up tomorrow.
Yeah, essentially for that country.
To me.
For that country.
For that country.
Be specific.
So do not buy Iranian bonds.
Not right now. Not right now. No. Wouldn't be a great investment, I'd imagine. But I have seen in the Forex world, people have been looking into Iraqi dinar. I don't know much about Forex. I don't even want to pretend like I know. But
what happened to those guys?
Well, the last person I had a long conversation with about Forex was one of the borrowers here, and they had 14 lates on their mortgage. So I take everything they say with a grain of salt.
If you are a Forex trader,
why?
Not just why. Where are you? The Forex bros were...
It was huge, like 2018, 2019.
Bro,
yeah.
I'm talking about they were having parties. They were inviting us over.
Yachts,
they're like, come on,
renting
man.
yachts out.
Can you see colors? Is what they used to ask. Like, I want somebody. We're setting it up right now. We got some special stuff. You see the new angle?
Oh yeah,
that
true.
we got some special stuff coming up. I want a Forex trader to come on our platform, and let's just go through the pros and cons. Come on here and explain to us.
Stipulation is you have to be pretty good at Forex. You have to be at an all-time profit. You can't be at an all-time loss.
Well, hey, do you exist?
Oh, do those exist is a great question.
Do you exist?
I would love to learn about
I would
Forex.
love to talk to the mindset of a Forex trader and really get into it, because I know some people that are pretty successful at it that actually know some technical skills.
Yeah.
And I'm curious, like, because I'm not in that market.
I've never touched that market. Like, I kind of want to get into it physically, because like gold and silver, I like having physical gold and silver. I feel like having physical currency fits in that same realm. If shit hits the fan in America, I have $10,000 USD. Great. Yeah. I've also got $10,000 USD worth of yen, $10,000 worth of whatever country I want to go to. If I can just have 10K in cash ready to go there, that's an asset.
Yeah, but but that's what I'm saying. Is the only play in Forex arbitrage?
I mean, no, because I feel like you can bet on currencies going up relative to other currencies. Like the yen is at a 40-year low relative to the US dollar right now, and it's been going down for a while.
Bro, that sounds like a sick ass video game.
Forex trading.
Forex trading. Like just the way you just explained that, like I'm gonna bet my yen against my yang. And we're gonna see which one goes up faster.
No,
I'm gonna make money.
Because if I bet that I think Japan could go on a crazy run here relative to the US dollar, or the dollar is gonna tank, I should buy a fuck ton of Japanese yen as my bet to be like, oh, the dollar is gonna tank relative to the yen. If I have a lot of this stuff at a 40-year low, if it goes back up, like...
So you got a formula already.
I mean, yeah. I looked into Forex before. I never got into it, but I looked into it.
So never pulled the trigger.
No.
My money's not there, but hey, if I did have money...
But no, my theory with the yen, though, with the 10-year Treasury, because I've been going on this tangent now, is if that becomes a more attractive asset, and it's another opportunity for people who want to get out of the US dollar because of whatever reason. Yeah. It's another lane to get out of it. So if another lane is going to get out of it, who's going to be buying all these US Treasuries? Which means if no one's going to be buying them, the rates are going to have to continue going up. And if you can combine that with the inflation that we're going to create with this housing bill, if it passes, because as many good things as it is going to do.
Just give me one thing.
But it will create inflation, you know?
We know. That's the whole point.
We want more inflation.
It's already happening.
When my gold goes to $20,000 an ounce because of that, I'll be
already
happy. I'll be
inflated.
happy. That's true.
Inflated. Pop the balloon. I want to see the balloon pop.
Me too. Honestly, I would love to. I'm positioned. My entire investment portfolio, since I got into investing, is positioned for that balloon to pop.
Yes.
So as much as I complain about it,
get ready.
I will profit off of it happening. So I'm a bad person on that front, I guess you could say. But I don't want it to happen. But if it's gonna happen, and I know it's gonna happen, I'm gonna profit off of it.
I don't know if you're old enough, but you're a finance guy, so you've seen The Big Short.
Actually, I haven't.
You have not?
I have not seen The Big Short. Right. That just killed all my credibility. I'm sorry, but I have not seen The Big Short.
You're cooked.
I've seen clips on YouTube. Shorts.
So The Big Short was what we're talking about right now.
Right.
It was.
I know the premise.
Yeah. People seeing the impending doom of what we were doing, even though it was, people were making money hand over fist. Mm-hmm. People were speculating on those mortgage-backed securities, filling them with anything.
Yeah.
Bro, dogs owned houses.
Oh, yeah.
And when the dog defaulted on the house, it went in this B security.
If you had a pulse, you can get a house, which I think we should do a full episode about just the 2008 crash, like the lead up to it. I would love to do that.
That's coming soon.
That's what radicalized me. That's like the thing that actually radicalized my entire financial thesis was that.
So it's happening again, except there's literally nothing, not even a house backing this money that we're creating.
Yeah.
So eventually, we're gonna have so many dollars in the balloon that it's going to burst, and you're going to see the markets go crazy. You're gonna see gold, silver, any hard asset, housing, Bitcoin too.
Yeah.
Even digital hard assets, because there's a finite amount of it. Anything that has any type of intrinsic or extrinsic value is going to shoot through the roof while the dollar tanks.
This is also like my tinfoil hat theory on that, while we're still kind of talking about that, is I saw in conjunction with the Japanese yield going up, the 10-year, a lot of Japanese banks have shifted to their infrastructure being on XRP instead of SWIFT. If that's the case,
government play.
If that's the case, it is a government play for sure. If that's the case, is this not maybe like a little like piece of candy to be like, hey, come bring your money in the Japanese bonds so we can test out how XRP operates with more money on it?
Yep. And they're going to figure it out before us, which is sad because it was our idea.
Not our idea. We invented it. It's our company. It's a U.S. company.
So like, I just don't understand. Like this was the one thing. Money was our thing.
That was Trump's like whole pitch to get into office this time was crypto capital of the world. Now Japan's taking, I think, the best crypto. My favorite crypto.
Well, they're more tech savvy, but like money, the U.S. has been the superpower in money for decades.
Yeah. We invented credit cards.
You know what I'm saying? Like money is our shit. Mm-hmm. Nobody should be innovating anything in the money space outside of America. Yeah. That's our thing.
I mean, England became a bank pretty much, you could argue. England went from being the whole world domination that they were in the, what?
Well, they're a little,
18th century?
They're a little pissy about, the war over taxes. So that's
because we made them become a bank.
So they still wanted a little piece.
The thing that's happening in the world right now in conjunction with us in China is what we did to England like 250 years ago, almost to the day. Yep. Like the thing that that our government is scared that China is doing to us.
It's cyclical, bro.
Yeah. Ray Dalio.
There you go. Mm-hmm. There you go. See, you have read books.
I have.
I'm going to link those books in the description.
And the videos. Those are good videos, too. Have you seen those videos?
I haven't seen the videos.
The videos what got me to read the book.
Really?
He had a whole video, like 30 minutes, about the changing world order. It's great.
Wow. Yeah, you got to read the book.
I'll read the book. Yeah, I haven't read that book. I only watched the video.
Yeah, you got to read the book. His philosophy on money and empires and...
Ray Dalio, come on the podcast.
Yeah. And just the exchange of power going through the dollar is Not just USD either.
Yep.
Like just currency in itself.
Yeah.
Phenomenal read.
I bet. I can imagine.
Yeah.
Did you have anything else you want to talk about? Anything
No, that was it. I just
right.
wanted to see your face and see our new cameras in action.
Yep.
We want to encourage you guys to like, comment, and subscribe if you're,
If anyone has some physical Japanese yen, I would love some.
Yeah. Sell it to Liam.
Start my Forex account.
And our new credit agency.
Yeah, that too. And Dibbs' credit repair. DarylDibbs.com.
If you're one of those people that are not interested, you're not getting an HEI from us, join the credit club. Mm-hmm. Join our free Facebook group, Real Pathways. Join the Pathfinders.
Is the thing out yet? I don't know if I can say the thing's not out yet. Okay, the thing's not out yet. I won't talk about it. I don't want to.
The thing's not out yet.
Okay.
It's on the way.
That was the thing that he talked about last week. He was going to show me. I saw it. It's pretty cool. It's really cool.
Yeah, it's not ready yet, but it is on the way. More details to come. They got to keep watching.
They do have to keep watching. You haven't earned it yet.
Like, subscribe, and comment, man.
Yep.
This is First and Future Finance.
See ya.